And we haven't even said a word about the fact that Tesla is still guiding for a 50% growth, CAGR. We haven't said a word about the bombshells that Elon dropped on the call. That probably got him chewed out by the compliance department, but he still said that. That's Elon for you. Hey, this is Tom Nash, and yesterday Tesla came out with the second quarter financials. Now, the quarterlies were amazing. They broke a lot of records, they beat on revenue, they beat on earnings per share, but somehow I still need these three apples to simply explain to the Wall Street analysts that Tesla had a good quarter. Now, look, I know you guys get it, but the analysts, well, they need this little example, that's fine. Now, one of the gripes of the Wall Street analysts with Tesla following the record-breaking financials that we saw yesterday was that Tesla has a declining margin. The operating margin went down to 9.6%, and that means bad news for Tesla, and that basically sent the stock price down in aftermarket. Now look, I'm going to use this example to show them, not you because you guys get it, why it's absolutely moronic. Now we have three apples here. Now let's take apple number one. So Team Apple, one slice, big slice, two slices, three slices, four slices. Anyways, so now we have four slices of Team Apple. Now, you would all agree with me, we have one apple sliced into big slices, four big slices. Cool. Now, on the other hand, we have two apples. Let's slice them into little slices. Little slices. Every apple gets small slices. Put it to the side, more small slices. Small, tiny slices, but it's the same amount of apple. In fact, now we're going double the amount of apples. Okay. Anyways, so now on the one hand, we have one apple with huge, huge pieces like this, big margins, one apple. On the other hand, we have here small margins like this, but lots of apple. Double the apple. Smaller pieces, double the apple. Big pieces, half the size of the apples. Which pile is bigger? Obviously, this pile, despite the pieces being smaller, right? This piece is big, this piece is small. So how does it make sense? Well, if you have a smaller piece but more apple quantity, then this pile is bigger, dear analysts. And this is exactly what's going on with Tesla. Tesla indeed had smaller margins, but it had more revenue and it had more net income, which means more apples, despite the smaller piece, what am I doing today? I can't talk despite the smaller piece. And that, ladies and gentlemen, means that despite having smaller pieces, Tesla had way more apples in this quarter, but somehow this schematic failed to get through the Wall Street analysts, and hopefully this example helps them understand. Now let's move on to talking about the actual financials. So first of all, we have to talk about a huge bombshell that we got in these financials, and somehow the mainstream media and the analysts completely missed it. The Model Y is now the best-selling vehicle in the world. Not an EV, the best-selling vehicle in the world. They sold 270,000 units in Q1, more than the Toyota Corolla by 10,000 vehicles. Now, if Tesla is already beating out the queen of vehicles, which is the Toyota Corolla, and it's beating it with a significantly more expensive vehicle, what's going to happen when Tesla actually rolls out the next-gen platform, the $25,000 car? It's going to annihilate whatever's left of Toyota, and that's not going to be a good look for anybody that has a four-door sedan model out there. So Tesla is already dominating, and it doesn't even have the big weapon out. Imagine the potential. This is nothing yet. Now, talking about things that are in potential and development, the Cybertruck is way more advanced than the next-gen platform. I mean, we already know that Tesla has started tooling, actually is stated in the financials. And that means if tooling started, we're about a year away from the beginning of ramp up. That's huge because you have to understand that, North America, the best market for auto manufacturers is the pickup trucks. It's different in Europe, but in North America, pickup trucks is the thing. Best margins, lots of units. The Silverado sold 500,000 units last year. The F-150 sold about 650,000 units last year. So we're talking about 1 million units in North America of pickup trucks just from Ford and GM. And Tesla is not even playing in that market yet. So now Tesla is also joining into the best market in America with this Cybertruck. Now, it's going to take about a year for it to start ramping up and probably 2 to 3 years until we see that 50, 100, 150,000 units pace. It's not going to happen in 2023. I'm sorry. If you want to ramp up, you have to wait a little bit. But luckily, Tesla has plenty of pre-orders. They're not going to be lucid and going to be stuck with inventory that they can't move. The Cybertruck is going to take a huge chunk out of whatever's left of Ford and GM in the place that it most hurts them. the pickup trucks, massive potential for Tesla. And now, boys and girls, let's talk about the operating margin argument. So all the analysts, all the mainstream media, talking heads, running around telling you that Tesla is finished. The operating margin of Tesla dropped to 9.6%. It's over. Tesla is losing margin. It used to be 14%. It's finished. The only problem is that they don't understand how this thing works. Remember our example from the beginning about the apples? Let's put that to the side. Let's look at other stuff. Let's compare to the operating margin of other great companies like Toyota. Toyota has an operating margin of 8%, lower than Tesla, even though they make 10 million vehicles a year. Tesla with about 2 million a year has better margins than Toyota, even at 9.6%. Or what about VW? Also 8%, 8 million vehicles a year. I don't even talk about Ford and GM with 4 to 6% operating margin and way more vehicles than Tesla. So if you look at the competition, Tesla is already beating them with 9.6%. So even after the decline in operating margin, Tesla still has the best margins in the industry. And that's without the Cybertruck, which is going to push margins up, without the FSD, which is going to roll out an 80% gross margin because it's a SaaS, service as a software model. Even before all of these things, Tesla is already annihilating the other companies, even with the decline margin. So before you go ahead and tell the world that Tesla is finished and the growth story is busted, look at the competition, get some help, get some context. And now let's talk about the second part of this argument. Remember the Apple example? Well, it's actually right in front of you. Tesla just had a record-beating quarter as far as revenues. $25 billion in revenues in a single quarter. Tesla is currently on pace for $100 billion in revenues per year. Absolutely mind-blowing. But that's not the point. The point is looking at the bottom line. Look at net income. The net income is up 20% from last year at $2.7 billion. So if I'm looking at this like a normal person, layman, and I'm saying, well, look, the operating margin went down to 9.6%. That is true. But Tesla made more revenue by 46% and more net income, which is the bottom line, by 20%. And they've generated $2.7 billion in net income. I mean, this is what happens when you can increase sales by 46% by dropping prices a little bit and still contain your costs, only raising it 21%. So when your revenues go up 47% and costs only go up 21%, you still make lots of money, even though the operating margin went down a little bit. It's just a percentage. At the end of the day, you've made way more money. Tesla is probably the most efficient company I've seen, not the most efficient auto company that we knew a long time ago. At this point, it's mind-boggling to me how they're doing this, and more on that later. But you have to understand, look at the financial stability of this company. $1 billion of free cash flow this year. The cash is up 22% from 19 to 23 billion. Virtually no debt. I mean, Tesla's logo need to be in the dictionary next to the definition of a bulletproof company at this point. Who is going to destroy this tank? And we haven't even said a word about the supercharger network growing like crazy, up 33%, tens of thousands of chargers. Who has that network? We haven't said a word about Tesla being the fastest growing EV brand in Europe. We haven't even said a word about 222% increase in storage deployment. What are we talking about here? We haven't said a word about the amount of miles Tesla is getting. Talk about AI race. Tesla has the most amount of miles in the industry, and it's actually exponentially growing. Nobody's going to catch them as far as AI and real world data. If anything, we're talking about a massive AI company completely under the radar. Look at NVIDIA. NVIDIA is trading at 44% price to sales. Tesla's at 11. NVIDIA is 240 PE. Tesla's at 80. If anything, Tesla is currently way cheaper than it should be, because when you understand that this is actually not just a car company, which they seem to struggle with still in 2023, you realize that this company is not trading expensive at all. And we haven't even said a word about the fact that Tesla is still guiding for a 50% growth CAGR. We haven't said a word about the bombshells that Elon dropped on the call, one being that Tesla's going to 5x or 10x from here. That probably got him chewed out by the compliance department, but he still said that. That's Elon for you. We haven't even said a word about them being in talks with other OEMs about licensing out full self-driving software. I mean, this is like massive stuff. And yet they're getting ignored for 9.6% operating margin, which is still the best in the business. Is this for real? Look, we're talking about a company that has the smallest volume of all the biggest OEMs. They have the best margins. They're investing in massive amount of CapEx, massive amount of R&D, working on multiple expensive projects, building factories, building robots, building AI, building cars. Somehow they're not only profitable, but they're still the most profitable in the business. $25 billion in revenue, $2.7 billion in net income this quarter. And add to it the Cybertruck with improved margins, FSD, the $25,000 car, all these things. And the fact is, we haven't even mentioned the most important stuff. The fact is, they already have the best-selling vehicle in the world. And the fact that we had a record-breaking quarter in almost every single category in the world. And still somehow, we are here talking about 9.6% operating margin. We're talking about margin. Margin. We're talking about margin. These guys had record-breaking numbers, record-breaking revenue, record-breaking net income. Best-selling car in the world. Massive amount of upside. And we're talking about margins. Really.